So you want to know what is happening with local home prices here in the Denver metro? Well, we're going to bring it to you on this month's First to Know. We already have what has happened in both January and February and the interesting signs on what we're seeing with home price appreciation, inventory levels, and overall what is happening with the active listings that are not on the market. Thanks for sticking around. Let's dive right in to the good signs, which is as you look at average close price month over month, we were up 4% from 692,000 to the average close price of 718. You take that median close price though of 590,000 last month, or let's call it January, to 600,000 in February. Very interesting as we start to look at another 1.7% appreciation in a singular month. Now, the good news is that some of this is rebounding from you looking at those prior year numbers, 2.3% decline year over year and 5.2% on the median home price. So the key, we can't go backwards. As we know, we went through a correction last year. We're still going through a correction, but this month over month sign of home prices appreciating is a good sign for pricing. It's not necessarily a good sign in other areas, which I'll cover here in a moment, as again, we're trying to challenge or figure out what's the threshold for affordability. Now, as you look at the overall condo closed price and median closed price, again, both of them up 2.1% and 1.3% when you look at the month over month numbers. Now, what's really interesting about all of this, though, is the conversation around supply. Active listings are the listings and the amount of listings that are sitting available active on the market. New listings are brand new listings brought to the market within that time period. We'll call this monthly. As you know, in our weekly housing market update, we bring you new listings and active listings nationally on the weekly level. But as you can see here, what's interesting, the active listings, if you look at January and February, it dropped 20%. Now, again, it's up 68% since this time last year, but last year was a mania. It was the height of a market into the correction. And you can see the active available listings is still, though, almost 2,000, maybe 3,000 less listings that are supposed to be on the market as we were looking at 2020 and 2019, which were both very healthy markets. So we have very little active inventory sitting on the market, and the new listings, thank goodness here locally in Colorado, we're up 17%. So more people did bring their listing in the market, but what everybody's trying to figure out is at any point, is this inventory going to sit? So as you can see, based off the amount of new listings come in the market, there could be plenty more and things go very, very well because the active listings are declining, meaning these homes aren't sitting on the market. Now, there are some challenges when it comes to pricing and what's happening with demand. So as you can see here, pending listings, which is demand, meaning the amount of homes that went under contract, you can see from January, February, already up 13%. So we could say 13% growth in the amount of demand into overall real estate practice. And unfortunately, as you can see, we saw a 20% decline in supply, meaning month supply of listing went from 1.1 to 0.9. Remember, we were talking about last year was just crazy at 0.4, but there was actually, once we got into March, we were at 0.2, which was absurd. So healthy traditional market is about 4 months of inventory. We in Colorado are still at 0.9. And that number is dropping. So unless you and other people are thinking about bringing inventory to the market, all that would lead us to believe in this month's national housing market update related to our local market update, which we're covering today, is that home price appreciation month over month will continue due to the fact that the homes that are coming on the market are not at a fast enough pace to cause more and more properties to sit. And if the homes don't sit, then they don't have price adjustments. And if they don't have price adjustments, that does not bring the home price closer to the floor. What it does is it's actually resisting the floor and continuing to move upward. And what you saw was the bounce off the floor upward here in the last 3 to 4 months as rates have not necessarily gone down, but many people are starting to look at what is the new threshold for affordability. And as you can see here, homes are going under contract at a greater rate than they were the prior month. That means there's more demand. And unfortunately, there is less inventory coming in the market, which means that it's not sitting and available, which is going to continue to help home prices appreciate. So lastly, as we close, you can see here that direct reflection is unique though to the average days in the MLS is 47. So what does that tell us? That means that these properties are not getting multiple offers immediately over list price upwards and beyond of hundreds of thousands of dollars like last year. So this home price appreciation, remember, we still need about 6% to be flat compared to last year. So even though the home you buy today may appreciate month over month at a slower rate, we're actually going to end up this year, when you're looking at comparing 2022 to 2023, somewhere most likely just a lower rate of appreciation year over year, potentially even flat. But just know that these are all good signs to slowing down the pricing growth. It's just that if you're listing your home, 47 days is becoming the new norm, which is a lot different than what some people have experienced. However, remember, because there's less inventory, there are some homes that are going to go immediately under contract, which is also why you want to prepare, promote, and get your home ready appropriately with a local professional. The close price to list price at 98.9%, you could see is that we're getting closer to exactly what you list at is what you're going to get. And that's exactly where the market is sharing some form of health and not necessarily mania or correction like we experienced from June to about November. How do we conclude this? 3 things. Inventory's dropping, demand is increasing, home price is going up. The rate at which it will continue to see based off whether or not people bring their homes to the market. So if you're in the market to list, buy, or invest, remember, schedule a 15-minute consult with me, and I'd love to walk you through some strategies. If you are out of state, I will connect you with the top professionals all across the nation as they can advise you on what is the right thing for you to do based off your story and situation. But from me to you, there you are, this month's First to Know local Denver metro market update. And as always, keeping you current is what matters to us. Thank you for giving your time and continuing to spend time learning about the market versus trying to time it.